Hi, this is Sheldon here with the currency advisory report for today. Well, the US dollar index is at 79.65, which is down by 0.07 percentage points. Now, US policy makers are meeting today after a brief Christmas break to find a solution to the fiscal cliff problem. Markets worldwide are tracking what's happening in the United States. And the general consensus is that US will resolve the fiscal problem as the consequences of a no resolution will result in a huge sell-off in risk assets. Domestically, we expect the dollar to weaken against the Indian rupee. Now, we had some market moving news yesterday when the center decided to divest around 12.5% in the state-run Rashtriya Chemical Fertilizers Limited, in lieu with its target of raising around 300 billion rupees to lower the budget deficit that is present. Along with this, the government also extended its policy of cheap loans for exporters. Now, all these measures, along with rising equities, will add further pressure on the US dollar. Traders can short sell the dollar rupee pair at around 54.95 to around 55 levels in the spot market. Now, there isn't much data from the euro region. In fact, for the past couple of days, we have seen that even the European politicians aren't making any statements. The euro-dollar pair is currently moving entirely on the news from the United States. Apparently, the euro hit a high of 1.3252 against the US dollar. We expect this rally to continue till we get a clearer picture on the fiscal cliff front. Now, we have the US unemployment claims and new home sales data which will be released later today, but we don't expect markets to react much as the data numbers come out. Only if probably there's a huge deviation from the stated figure. In rupee terms, we expect the euro to trade flatly against the Indian rupee. We see a very strong support at around 72.25 levels against the Indian rupee, and on the upside, we see that there's a very strong resistance at around 72.60 in the spot market. So basically, the euro will trade in this range versus the rupee. Now, the pound is expected to continue trending downwards against the Indian rupee. Traders can short sell the pound rupee pair at current levels for an intraday gain of around 30 to 40 paise. The pound is tracking the euro internationally and it's moving up against the US dollar. The same pattern that the euro dollar is doing, the same is what the pound is tracking, and observing that this is the same relation that is there between the pound and the euro versus the dollar. Now, with the new government in place, we have seen the yen weaken to historical levels against the dollar. It has broken the crucial 85 level psychological mark and is presently trading at 85.77 against the US dollar. With the Prime Minister Mr. Shinzo Abe publicly remarking that the yen should be around 85 to 90 levels against the dollar for Japan to be competitive and meet its inflation target, we expect the yen to continue its downward spiral against the dollar. Probably to around something around 88 or 89 levels is where we could see a small retracement back. In rupee terms also, we expect the yen to weaken against the Indian rupee. Traders can sell the yen rupee pair at around 64 levels in the spot market. A very important point to note is that the December month contracts will expire this afternoon at 12:15. Hence, traders are requested to either roll over their position or square off their positions. Let's wrap up with the technicals. Well, the dollar has a very strong support at 54.63 and a resistance at around 55.20 against the rupee in the spot market. The euro has a very strong support at around 72.37 and a resistance at around 72.82 against the rupee. The pound has a very strong support at around 88.50 and a resistance at around 89.30 against the rupee. And the yen has a very strong support at around 63.60 and a resistance at around 64.52 against the rupee. Well, that's it for today. Thank you.